Oh, Vijay bhi aa gaya. Okay, good, good.
Hello.
Yeah, hello Vijay. Hello
Yeah,
brother.
Jen. Yes, yes, yes.
Yeah, I'm beginning. Yeah, right.
Yeah.
So consolidated statement of financial position. In the consolidated statement of financial position, the investment in associate should be shown as cost of investment in associate plus C. If you make a consolidated statement of financial position, that is parent and subsidiary,
Hmm.
so you should show your investment in the associate, that cost. You should show the investment in associate as this. That is the cost. Suppose you paid 1 lakh to acquire it, plus
Hmm.
group share of post acquisition profit, suppose some 20K you got from the associate, and
Hmm.
any amounts or dividends are paid out, you have to like subtract. Okay. No,
Okay.
yeah, okay, yes, subtract, and subtract dividend, suppose it is 5, and any amount written off the investment, that means you just sold off, or just investment value has come down, suppose for example impairment or some write down has happened, subtract,
Okay.
subtract, suppose 10, so you will get
Okay.
the value.
Okay.
So how much is like 120, and like 120 minus 15, so 100. Okay, so just here we are going with the next question. On Jan 1st, the net tangible assets of Alaska company amounted this, financed by this much, $1 ordinary shares and revenue reserves of this much. When a company with subsidiaries acquires this much shares in Alaska, so how much is the shareholding they took in Alaska? Let us see. Of the shares in Alaska company for 75,000, so they took 30,000 shares
Hmm.
for 75. Okay,
Hmm.
and the what's the share capital in that company? 1 lakh. So
1 lakh.
1 lakh,
Yes.
how much you have acquired? 30%, correct?
30%.
And you
Yeah.
paid how much?
30,000.
75.
75.
And what is the profits that company is giving you? 30,000. Out of that, dividends is paid 12. So leftover is 18. On that, you should get 30%. So this is your share. Add it to the investment in the statement of financial position. This is the value of the investment. Just check it. I'll go for the other question.
Consumer net tangible assets.
If done, then we'll go out. We'll go to the next question.
Yes, yes.
So now is the question here. Set out below are the draft accounts of Pishpash Company and its subsidiaries Abico. Pishpash Company acquired this much percent of equity capital in Abico. Okay.
Okay.
So Pishpash Company and its subsidiaries. This is one group.
Hmm.
Just a second. Just a second. Just a second.
Yeah.
Yeah. So this company is a group and it has a investment in this. Okay. And the Pishpash company has acquired this much of equity capital in Abbey company 3 years ago. And when they acquired, the reserves were 40,000 of the associate. Okay. So we can see here there is some intercompany transactions happening, like loan to Abbey
Mm.
of 20 given, and
Mm.
loan from Pishpash 20. Okay, this is one thing.
Okay.
Investment in associate, the cost is this,
60.
and
60.
the share capital of associate is this. So can I say 60%? 60% is what they have invested, correct?
Correct.
But it is
But
not like that.
they gave
Actually, Pishpash
40% there.
acquired 40%. They have already given. Actually, Pishpash company
Okay.
acquired 40
Okay.
of the equity of. Acha, it is 40 what they have acquired. Okay, 60 is the Abbey company's capital. Okay, so for 40%, which happens to be this much, they paid this much. That is a different ballgame. They can pay higher amount, correct?
Correct.
Understood?
Yes. Yes. Premium they have paid it.
Now let's do the working. So we will do the consolidation part. We'll see, like, the consolidation is already done. We'll just see how much the group should get from the associates.
Mm.
So like, here is the income statement. 95 is the group's profit. Okay, less
Mm.
tax. Then the profit of Abbey is this. So out of this, how much they should get? 40%. Share of profit from associate.
Mm.
So net profit, share of profit from associate, and then less taxes. This is nothing but the profit attributable to the members of Pishpash. That means this is the group profit, correct?
Correct.
Till
Correct.
here everything is right. Let's go for the balance
Yeah.
sheet. In balance sheet, we will just take the group and the investments, how much it has grown, correct?
Mm.
So 220 is the non current assets of the parent,
Mm.
and we will see how much the investment has grown. So 60 is what they have, and they got share
Mm.
of profits even. Okay, we'll calculate.
Mm.
So 60 is already what they have, correct?
Mm.
And the they will get their share. See, they will definitely get the share from profits. Who would get the share from profits? The group, the parent, correct?
Parent. Mm.
So their share from profit is already what you have calculated. So let us see. But from the, we would consider the retained earnings, correct?
Correct.
Where is the retained earnings here?
40.
Retained earnings. This is
And
the retained earnings,
100.
correct?
100.
Your
Yes.
profits
Yes.
would go to which account?
Return earnings.
And how much was the reserves when the company
Post and
was
then
acquired?
40.
So that is pre. We will give the post. In post acquisition, the parent would get, correct, its share of
Yes.
profit.
Yes. Yes.
So now Pishpash company's retained earnings is
Correct.
this. This is the parents. This is the associates retained earnings. Out of that, this is the pre-acquisition. So what is the post-acquisition?
60.
And out of that, how much they should get?
40%. That
That
is
is taking it to how
24%.
much?
So 24.
24. So
And
post-acquisition retained earnings 24, correct?
correct.
So why are they getting this? See, this is what they got from their profits, correct?
Correct.
Net profit for the year.
Hmm.
This net profit for the year would be transferred to the
Retained earnings.
retained earnings, and this is the retained earnings of the draft account. The profit for the year. Not given anything, no year, nothing they have given. Just they gave the group's retained earnings is this much after getting the share. Okay, 40% of that. And the share, whatever they have calculated, 20 would go into the retained earnings.
Hmm.
They did not make any accounts. Actually, that has gone into this actually. Okay,
Mm-hmm. Mm-hmm.
this 100 what they are showing now, that 100 whatever is, it's a combination of like something 50 of current year and 10 maybe, because 40 was the retained earnings when it was acquired 3 years ago, correct?
Yes.
So after that some profit has been accumulated, correct?
Correct.
And this year's how much it is, 50. So that completely has gone into it. Not 50, it's 20 na.
See, current year.
Yeah, so that is 100. 100 is the retained
100
earnings
minus
balance
40.
of this associate. In that 20 is already included, maybe this one,
Ah,
and 40 is
yes.
pre-acquisition.
Yes.
So maybe they have earned some 40 after that. Like it is 3 years back's case.
Ah,
So altogether it is like how much? 60, and from that they should get their share, correct?
correct.
So they got their share, and 174 is the retained earnings of the this one
Hmm.
group, and 84, like 60 was already the value,
Hmm.
60 was the investment, the cost, and that
Hmm.
has grown by how much?
20.
24. Okay,
Hmm.
so
Okay.
that 24, because they did not give any information regarding anything like dividends, because I'm not seeing
Yeah.
anything here.
No dividends.
Yeah, so like from retained earnings, because what I'm seeing here, this profit of 50 would go into the retained earnings only, and then it would be seen like what was the pre, and the post has to be apportioned, that we have done here. And loan to associate, in the sense these guys have given a loan, that is their receivable, correct?
Yes.
Asset side and current assets. Share capital is okay, group share capital and retained earnings we have got. So balance sheet tallies, that's it. So shall we go for the next question? Just
Yes.
have a look through this. If you have any doubts, you can ask me. Again, you can see the question.
Hmm.
Again, read it, and again, I'll show the solution. You can see. Shall I move forward? Shall I scroll down?
Yes. Yes.
See, actually, this is the investment income, correct?
Hmm.
This is the investment income for whom? This is the investment income for whom?
Parent company.
Correct?
Yes.
Actually, let me clarify something. Please understand. See, this net profit is whose net profit? Whose net profit?
Groups one.
Groups.
Hmm.
And the share of the profit the group is getting from associate company, correct?
Yes.
Associates current year profit is this, correct?
Correct.
And this profit would go into the retained earnings of whom?
Group.
Group. That is okay. And group's retained earnings is given here.
Hmm.
And group's retained earnings is given the question as 150. So this retained earnings of the group is 150, but they have acquired the associate. When they acquired the associate's reserves were 40,000 pre-acquisition. We will remove it, and the post-acquisition we have to give to whom? Group. That's it.
Group.
Understood?
Yes.
It is not. This would go into the. See, this would go into the retained earnings of what you got here. Share of your profits. Okay, would go into retained earnings of associates. Correct.
Correct.
And if anything extra is there in associates, that also you should get.
Hmm.
See, every profit has to go to the associates retained earnings, na?
Correct.
Apart from current year profits, if suppose in a span of 3 years they had earned more profits, that also you will that also is your part, na? So
Yes.
you are
Yes.
seeing the current year's increment in their investment value.
Okay.
Got my point?
Got.
100 is what? Associates retained earnings. 40 is pre-acquisition. So post-acquisition is 60. In that current year's maybe how much is the current year's profit of theirs? 60. 50. So
Okay.
this 60 has 50 and maybe more profits of 10 they would have earned in this span. Okay.
Okay.
So 20, however 50 ka how much percent they got?
30%.
40.
40.
But 10 is also there extra. 10 ka also 40% they will get, na?
Yes.
That is making how much?
10.
How much?
24.
That's it.
Okay.
So are you writing something extra to their balance? No, you are writing this 20 which they got from the share of the profit and 4 extra. That is extra amount in the retained earnings balance of associate.
Okay.
That also the parent should get, na?
Correct. Yes.
This is a draft statement actually. Assume that associates assets and liabilities are stated at fair value and assume that no NCI is not there. And you have to prepare a summarized consolidated statement of FISPASH. And this is a draft account. Okay. So what
Okay.
our estimation is 100 is associates retained earnings, in which
Okay.
50 of the current year profit is there. Of that 20% has gone to the parent, 40%, the group, that is 20, and 40 was pre-acquisition, correct? So
Correct.
post-acquisition 10 is also there in that extra. Of that 10, 40% is 4. So 24 they got. That's all right.
Okay.
Understood?
Understood.
That's right. So this 20 would however be there in their retained earnings, what they are getting, and 4 extra also. That's what. That is all almost complete. Done. Shall we move forward? अबू क्लियर हो गया पॉइंट?
हाँ सर.
पक्का?
Yeah.
Or for that 24, can we say like this also, Jen? See, overall the profit is 100 for them.
100 में से that's a post acquisition that they are getting 40% of that.
That's what like overall $100, and of which the something 40 I think so in the beginning pre-acquisition profit.
Yes.
Okay. So if we deduct that one, so after 60, from 60 to 40% we will get 24.
Yes, that's what only. That's only we did, na?
Yeah. Good.
अच्छा, ये क्वेश्चन आप लोग अभी ट्राई कर लेंगे, चलो, क्योंकि इसके बाद का अबू तुम्हारे को कितने बजे जाना है?
20 minutes में निकलना.
हाँ,
20 minutes में निकलना है. 20 minutes.
20 बोले तो अब ये क्वेश्चन और थोड़ा टॉपिक्स, ये क्वेश्चन मुश्किल है, फिर ये थोड़े टॉपिक्स होते हैं और ये क्वेश्चन करा देता हूँ, ये बड़ा क्वेश्चन फिर रह जाता है, ये कल कर लेंगे क्या?
हाँ ठीक है सर।
हाँ, ये एक ही क्वेश्चन रह जाता, बहुत बड़ा है, 6 एडजस्टमेंट्स के साथ है,
ओके
ये कल फिनिश करा देता हूँ, पूरा करा देता हूँ कल ये क्वेश्चन,
ओके
तो कल हमारा एसोसिएट्स भी हो जाता, कल वो फिनिश करके हम लोग अकाउंटिंग फॉर इनकम टैक्स भी स्टार्ट कर देंगे वैसा ही इंट्रोडक्शन, ठीक है ना?
ओके
ओके, मैं बेसिक्स दे देता हूँ, फिर परसों तक फिनिश कर देंगे वो चैप्टर, वो 2-2 दिन में हो जाते, छोटे छोटे चैप्टर्स ही है। अच्छा, अब ये चेक करो ये क्वेश्चन, रीड दिस। Alfred company bought this much shareholding on 31st this in Grimbald company at this much. Okay, 25% shareholding लिया है, ठीक है ना? ग्रिम्बाल्ड कंपनी का जो प्रॉफिट पीबीटी है वो 82 है, एंड द टैक्सेशन चार्ज ऑन ईयर्स प्रॉफिट इज दिस, इतना टैक्स है, डिविडेंड इतना, एंड दिसंबर 31 को पे किए। दे आर आस्किंग यू द एंट्रीज फॉर एसोसिएट which would appear in the consolidated accounts of Alfred Group. So let's take. तो ये हमारा group share of profit. How much the group share of profit and associate group's share of profit the associate from the associate company, the group share, the group should get. Group share of profit is how much in associate?
25.
So out of the profit they should get 25%. So this is the 25% they're getting from profit, correct? They should get, na?
Correct.
And next point. So now whatever the profit the group gets, they have to pay tax or not on that?
Correct. They have to pay.
What are you showing actually? Calculate the entries for associate which would appear in consolidated accounts of Alfred Group. So we are seeing only the group shares. So group should get 25% from the associates profit, and also they should pay income tax on that, correct?
Correct.
So what is that income tax expense? 32,000. So in that also they'll pay their shares tax only. Just a second, हम लोग इसको ऐसे भी कर सकते हैं, 82,000 माइनस इनकम टैक्स करके करें तो डायरेक्टली आता ना आंसर, 82,000 माइनस 32,000, 50,000 into 25%. What kind of stupids these are? 82,000 is the profit before tax. Just remove the tax.
Okay.
Into 25% कर दो, you'll get 12,500. Next point. And now investment in associate has grown by how much? What is the investment in associate? Sorry, they did an investment of how much? 38,000, correct?
38.
38,000 plus how much they should get from the profits?
25%.
25%, that is 12,500. And out of that something is given, not dividends, 20,000. So 20,000 ka 25% is how much? 5,000, huh? 5,000. Actually, all you should pay after deducting taxes. That is what I'm seeing. Okay. So just a second. 5,000. So 38,000 plus 2,500. See, actually, this is the after deducting this, we took after tax profit, correct? 38,000. 38,000 कैसा है आपको?
82 minus
82 minus 30. Actually, this is the cost of investment. Sorry, 82 minus 32 is how much? 50. 50 का 25% is how much?
Okay. 12,500.
of 12,500 में से what will you remove?
Investment cost of.
Dividends.
Okay.
Why are we removing this?
Return.
Dividends, we have to find out the cost na. Dividend they have received as investment income. Yesterday we
Okay.
saw investment income, they'll show in revenues. Dividend,
Okay.
and they will write in the cash account that much amount. So that is okay.
Yeah.
But apart from dividend, removing the dividend part, their investment has grown na by how much? 7,500. How? 12,500 minus 5,000, the dividend payment. 7,500.
Okay.
So
Okay.
38,000 plus 7,500 is 45,500. This is the answer. अबू समझ में आया?
समझ गया सर, अब समझा,
हाँ
अब समझा मैं, आप क्लियर करें तो अब।
हाँ वही. Okay, okay. See, upstream downstream is nothing but from group to associate, it is downstream if something is sold, and from associate to group if something is sold, it is upstream. Okay. So what you need to do is, it's intra-group transaction kind of, but here the thing is something else. The important thing is to remember that only the group share is eliminated. Okay. That means profit and loss resulting from upstream and downstream transaction between investor and associate are only profit and loss you should eliminate, and that too to the extent of whose share? Investors. Correct?
Correct.
Don't worry, we'll do a question. See, Astral Company, a parent with subsidiaries, holds this much of equity shares in Belt Company associate group. During the year, Astral Company makes a sales of this much to Belt, and they got a profit of 25% additional on that. That's markup. Okay. Hello.
Yes.
So it is like sales of this much, 100 plus 25, 125. The sales is. So can you find out the cost? $8 lakhs. Okay. So what's the difference in this to the profit? Correct? Cost price, profit, selling price. Selling price के नीचे selling price. How much is the cost price? This unitary method. So 2 lakh is the profit. In that, who should get the share? Group. So you should eliminate what? Astral Company has made an unrealized profit. This is between the group and the subsidiary, group and the associate. Correct? Is this sold to third party?
No.
Is it sold to third party?
No.
So is it an unrealized profit or not?
Correct. Unrealized profit.
So you should remove the unrealized profit up till whose share?
Up to the parent share.
The group share. That is how much? 25%. So that we will remove. So your this one, the Astral Company has made this much on its sales to the associate. The group's 25% of this must be eliminated. So debit, your income will be always credited. Now when you get some income, you will be crediting that to the P&L account. Correct? But when you remove it, the adjustment entry is debit. And investment has not grown. It has come down now. Okay, to the tune of 50,000 because of the elimination. So that again, investment account you have to credit. That's it. So impairment loss is nothing but your investment is of 1 lakh. And share of post acquisition return is suppose 20,000. And again, if you have some impairment loss, for example, any impairment losses, if you have any impairment loss, that means impairment of assets. That means assets value has come down. Okay. Okay. That also you need to adjust. Suppose 10,000 you need to adjust here. Okay. So you will get the, actually what they're doing. Yeah, that should be deducted from the carrying amount. So cost of the investment and share of the post acquisition return earnings. Acha, yeah, you have to deduct the impairment loss. That's it. Okay. Hello.
Yes, sir.
Yes, yes, yes.
Impairment loss has to be deducted to get the actual value of the asset. If there is any impairment loss. Okay.
Okay.
So tomorrow we will do this question called the John Company. We will solve this full question tomorrow. That will be the end of the chapter, and accounting for income taxes will start tomorrow. Acha, can I send you some basic video for accounting for income taxes? Will you watch it?
Yes, yes. And one more thing, a small thing, Jain. Do you have any idea? Do you have any video that thing on ASC 340?
Uh-huh.
ASC 340.
ASC 340 is what actually?
It is other assets and deferred costs.
Other assets and
Deferred cost.
deferred cost is outstanding expense, huh?
Asset it is deferred cost, deferred expenses.
Yeah, that's what deferred is outstanding. Now we will pay in future.
Yes, yes.
I will check, brother. You ASC
Okay, Jain.
340, na? I will check and
Yes, yes.
send you.
Okay, Jain. Okay.
Have you finished the tangible intangible?
No, no, Jain. I'm going through that one. And yeah, I was just referring to this one, so I thought to ask you once about this video.
I will check and definitely
Okay.
send you if I have.
Okay, Jain. And one more thing, Jain, in our present topic, if the value of the investment has come down because of some reason, so we will be charging it to the P&L account, right?
Yes, yes. Actually, if
So,
suppose
yeah.
your assets carrying amount is 1 lakh, and in the
Yes.
market when you are ready to sell it, people are ready to pay only 80. It is you are
Yes.
getting a 20 impairment loss.
Yeah.
So you
So
need to
if
deduct from the asset, and you have to write the asset's actual value, that is 80,
yeah,
and then 20 you have
yes.
to recognize in the P&L as a expense loss.
We'll be putting it in comprehensive income, right?
No,
Statement.
no. Impairment loss always P&L. If there is a revaluation gain, comprehensive income, that is as per the IFRS.
Oh,
US GAAP has
okay,
no
okay.
revaluation gain
Yes, yes,
concept.
yes, 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 yes. Okay, got it,
If you
got it.
want,
Yeah.
some
Understood.
more clarity on this, I have some
Yeah.
4 or 5 videos I'll send you regarding revaluation only. Okay.
Okay,
In
okay,
that
then.
there is a
Yes, that would be
reversal
great.
of upward revaluation, downward revaluation. Lot of cases are there. I'll send you.
Yes, yes, Jen. Please.
I'll send it. Today. Okay.
Okay, okay, then. Okay, Jen. Thank you.
Thank you.
Okay. Jen. Yeah.